Brent Swarts here, Capital Gains Tax Solutions. We're in the Lake Tahoe tour to help you defer capital gains tax when you sell your luxury home. And we're here at 1000 Holly Lane, just on Stateside. And I'm with Rebecca Monson, and she's going to talk to us a little bit about, what we're seeing in the marketplace right now, as well as some of the nuances between South Lake Tahoe, California side and state line. So, Rebecca, what are we seeing right now in the luxury market? I mean, we're seeing increasing costs on some things. And so talk to us about just kind of the general marketplace right now.
Well, we're definitely seeing a lot of increased costs. Property values have gone up over the last 2 years. So, there's a lot of equity in homes. Building homes costs more. So buying an existing home is actually a great idea these days. And then when you're talking about the difference between California and Nevada, there's a lot of difference. California has set property taxes, you know what you're getting into. Nevada doesn't have state income tax, but the property taxes there's some nuances on how that works. So make sure you get with your realtors. We can figure out what that amount will be, but it's not a straight number. And property typically in Nevada costs more than in California just because of the non-state income tax. People are looking at retiring and living in Nevada instead of California these days. Yeah,
very, very well said. And so this is a case study. For example, this property is listed for about $7.9 million. Again, it's 1000 Holly Lane here on the Nevada side, and it's a newer build. And so we're going to estimate that the basis is somewhere around $4 million. And so the state of Nevada, one of the advantages is there's no capital gains tax in that state. However, you have a federal capital gains tax of about 20%. And then if it's an investment property, you add another 3.8% for the Obamacare tax. And so this property, if they were to sell for about $8 million and their basis is about, let's say, $4 million, that's about a $4 million gain. And the difference on that, on about 25% or so, is about $1 million. And so the question is, do you have a team that can help you defer that capital gains tax? Now, some people might think of a 1031 exchange, which is very common, but what if you was another way you can defer capital gains tax and not have to be forced to overpay for a property? Well, that's where the Deferred Sales Trust comes into play, and that's where we specialize at Capital Gains Tax Solutions, and also working with experts in locations just like South Lake Tahoe to help you exit in a way that is going to give you more wealth and help you preserve more wealth over time. So if we can help you at all, you can check us out by going to capitalgainstaxsolutions.com, and let's look at the next property that's coming up here real soon. Again, we're doing a tour around the entire lake, and we look forward to connecting with you soon. Bye now.